Good morning, everybody. It's Cowboy. It is Thursday, 8:30 a.m. EST. We're about to jump into the charts, and just a quick announcement: the Guerilla is back today. We will be doing Markets and Mayhem on the Rogue channel with special guest John Singleton. So come on over to Rogue. It's going to be over, of course, on Twitch, Rumble, and so on and so forth. And if you want to know more about that, go ahead and ping me. Ask me questions, and I'll tell you how to get there. All right. So let's see here. Just going to take a quick look at the charts. Just a reminder what we do. We help people become traders. We help people create their own trading method, otherwise known as an algorithm, so you don't have to know how to code or any of that stuff. We can teach you pretty much from scratch and point you in the right direction as well if you want to do things that are a little bit outside of the wheelhouse, outside of that bailiwick. So let's go ahead and jump in. Let's see here, present, share screen. And off we go. Go ahead and make this a little bit easier to see for everybody. And I'm actually going to pull this one down here. Okay, so actually, this is an interesting chart. We're going to jump into Bitcoin here just in a moment, but the Australian dollar, the Aussie dollar, has really taken a turn. And I've noticed that a lot of currencies are moving very hard against the dollar while the dollar is not moving. It's very interesting. The dollar, if you look at it like on, say, the DXY, which is the dollar index, the dollar hasn't really been moving compared to some currencies, but the Aussie dollar is tanking. The Japanese yen is actually rising really hard. So it's been an interesting few days in Forex, to be sure. And, with the Japanese yen, we've been talking about this. I mean, at least once a week, we talk about this at length. And we talk about this on... see, we got a comment from Cool Cat Plunger. Yeah, definitely Plunger. We talk about this like on the shows that I do in the afternoon, all that stuff. The USD/JPY has a lot to do with what's going on in the economy, and it seems as if the Japanese are protecting their currency. So very interesting stuff going on. Let's go to Bitcoin. Start there. Everybody wants to see that. And we'll see what's happening with the corn. I was absolutely exhausted last night. I did not stay up for jack. Usually I stay up and trade, or I'll at least stay up and back test if there's no real trading to be had. But last night I was just zonked, and there's just a lot going on. And when you need sleep, man. I can, for like a month, stay up late and get the whole 4 hours of sleep, and then get another, few hours in the afternoon to catch up. But I didn't get that sleep in the afternoon yesterday, so I said, forget about it. Health comes first, right? So we had this liquidity that I mapped out, this box up here to the top. And I did say price would probably just jump up and grab that. And then I knew that there was a good chance it would head down. I didn't want to short until it broke out of this box here. And it looks as if it did so while I was probably sleeping. So let's jump down to the 30-minute chart to see exactly when all of this happened. But this was the trade. Had I been awake at, let's see here. Actually, no, this was in the afternoon, but the real breakout didn't happen until about, actually, I was awake. It was about, what is that, 6:30 p.m.? So it looks like I just wasn't watching. It does happen. And the consolidation breakout occurred. So the way that I would have traded that, I would have waited until price had broken down below these couple of peaks right here. Let's go ahead and mark those out. You have those three resistances right there, two resistances right there, or supports, if you call them that, bits of structure. And I would have waited for price to break that, and it did. And fortunately, had I jumped in, even on the break and close right here, my stop probably would have been way up here, and I would be in a winning trade. And I just was not doing that. I had a lot going on yesterday. Personal life is what it is. So, and I haven't developed any kind of auto trading algo for consolidation breakouts, which is probably a good idea, actually. But yeah, this would be the trade. Let's see, structure being right here. I probably would be out, or at least moving my stops up by this point right here, right? Because you have in some older price action. Let's see here. Cool Cat. So Cool Cat, are you actively trading Bitcoin right now? Did you get into any of these trades? I see you making some comments on there. But yeah, you see this rejection right there. Price would be brought to grab this liquidity, but just below this right here, below this older structure back here is where price might have a hard time getting past that. So I probably would be out of it by roughly here, or at least have taken some profit and stopped to entry, which this right here is going to be like a 1.5 to 1. It's a good trade, 1.8 to 1. However, had I held on for a little bit more, I probably would have looked at, let's see here, like this and that as another area to be exiting, right? So that I probably would have a second take profit right down here, and that is just above some of the liquidity that is from some older price action right here. So if we were to go ahead and zoom out and take a look at the big picture, the trade would be a little easier to understand. Let's do that. And, this would be that trade. So we had price that rallied up, that nice rally. We have a pullback, and then these are the targets on this trade. And let's talk about where price might actually go rather than how to trade it. I would look at, and we did this already, but I would look at this as one big impulse up. So I'll map that impulse. Everybody can understand one big move up on a high time frame. Okay. And then I would put a Fibonacci retracement tool on that. And it's right at the 382 right now. So this little dip right here, that first target I would have had because of that older structure to the left, that would have been a great place to go ahead and at least take off some profit, or at least put stops to entry. And then the 618 is at the bottom of the range. Now, all this price action down here is going to attract price, right? So there's a decent chance price will head down there. And let's take a look at a couple of things. First, let's go ahead and erase our liquidations here. Our liquidity that we get off of the Kingfisher.io, and let's grab another read of the Kingfisher.io and see what is going on with the liquidations. Remember, on the leveraged exchanges, there's a lot of money that goes around on leveraged exchanges. And so when you have a leveraged trade, there's going to be a point at which those trades liquidate. And that means that to those who might not understand it, what it means is that you have to keep adding money to the trade, right? Because you're borrowing money. And when the trade goes against you, the amount of money that's your collateral, that starts to shrink. So you got to add collateral to keep that trade alive. I know that's a little bit of a hard thing to understand, so I'm not going to explain it any further. If you want to know about it, though, give me a ping. You can send me an email or get to me on wherever, and I can give you some resources. All right. So the liquidity right now is sitting between 65,850 and 66,700. So let's draw some boxes here. What do we say? 65,850. So right about here, roughly up to 66.7. So you got some liquidity above price, and these are people who have gone short. Okay, so they're planning on price going down, and their stop loss is just above price, and their liquidation is consequentially up there too. Now, as far as the pretty strong amount of liquidity down here at 58.2 to 58.6, it's pretty strong there. So 58.2 to 58.6. It's kind of a sliver, but it's a pretty good. Now, price will go to one of these two, right? This is the most likely thing. Now, not to, but towards. When I go towards, doesn't mean that these liquidations are going to stay where they are. And as you noticed, every time I look at these, even if it's later in the day, these liquidations move. So price is always going to be moving towards these moving goalposts. Now what we do is we take a look at the price action in the algo, so we determine if price wants to head down or up. And I would say down right now. Price could bounce. There's always that chance that price bounces right about here and then it starts to head back up. That can certainly happen. There's reason for that. However, for the moment, algos are bearish on the daily. And let's go to my crazy looking screen here, my algo screen, and we'll see what all it says. Yeah, algos are pretty bearish right now. If I were to map out what I think will happen with price, just based on the algos and everything else I see on the screen, I think what we're going to see is price again. It'll probably move down to at least the top of this, prior range back here. This price action from this old range going back to late June, and we might see a little bit of a pop up, or at least just a consolidation and breakout. So that would look probably, I'm guessing, something like this. Right now, there's always that chance if for whatever reason things get a little bullish, it might actually peak up and grab this first and then go down. So there's always that chance. But right now things are pretty bearish overall. So I'm expecting something like this as my most likely scenario. However, of course, as I trade these, in this case, I'm going to let a consolidation build up, which it pretty much has. This is a consolidation on a lower time frame. I mean, it's even one on this 3-hour time frame, but on the 30-minute time frame, this is clearly a consolidation. A breakout of this is a legit trade. So I might even do this. I might even take this trade whenever it breaks out. So what I would do is I map out this consolidation right here, and I would go ahead and have alerts just above price, just below price. Not price, but just below the, above and below the consolidation, right? And then I would go ahead and say area of interest, and then area of interest. And then I'll make sure to have my trade station ready, which is on a separate computer for security reasons. Give me a second. Just getting that sucker ready. Okay, good. And there we have it, right? So give me a moment to okay, good. Of course, I have all my security stuff, so it's going to take me a minute to get it all open, but I do want to make sure I have that open in case that this trade does pop off. Where are you? Where is that? So this is the thing about doing this kind of work. I like 90,000, windows open, 90,000 tabs. I search through the tabs, so I just end up doing a new tab. And then, then I have 90,001 tabs. Lisa Gray, always thank you for the insights. Yeah, I'm glad I could help out. As long as it's helping out. So good. Well, we have our trade. I'll go ahead and map out what it probably would look like. If it breaks to the upside, my trade will probably look something like this. And that's a 1.2 to 1. It's not bad. It's a little better than that. It's about a 2 to 1. And if it's a downside breakout, then we're looking at this right here. This is a much better trade. Yeah, I would take it all the way down here. So this is almost a 3 to 1. So it's going to be a breakout to either side. So let me go ahead and see if I can open up the trade station. While I'm doing that, we are at the end of the live lab. Okay, so go ahead over to algofactory.tech. Talk to us. Go to this QR code at the top right-hand side of the screen. Zap that. If you want to know more about what we do, want to know more about how these trades are created, how to create your own algo. It's actually the best way to go if you ask me, right? You can use somebody else's system. That's fine. But if you're going to use somebody else's system, you have to know how to do that properly as well. They could have the perfect system that just really, it just has a high level of success, but you're probably going to fail. It's a really high chance you're going to fail even with a good system. And if you want to know how to avoid that problem as well, it's kind of the same thing. It all has to do with how you implement. So come on over, algofactory.tech, and don't forget.
Join us or die.